All right, so I want to welcome the great Steve Penny, brilliant technical analyst. He has a portfolio which you can follow online if you go to the silverchartersnation.com, which has done extremely well, over the years. And I'm really excited to have him on because we're seeing a period of weakness in some of these sectors, including gold, silver, uranium. So really excited to hear your take. Welcome, Steve.
Yeah, Elliot, thank you so much for inviting me back. It's always great to visit with you.
Yeah, thanks. Thanks for stopping by again. So just wanted to pick your brain. We've seen a lot of pullback in gold, silver, uranium. How are you dealing with this kind of pullback?
So there's different strategies for different people, right? There's no one size fits all, but my personal strategy for my long-term account is to scale in on weakness. This doesn't really bother me. In fact, I welcome it for a couple of reasons. Number one, it kind of shakes loose a lot of the weak hands, forms a base from which we can eventually move to higher price. But it also gives new entrants to the space an opportunity to accumulate shares at a discounted price. So my strategy is to scale in on weakness. I'm not trying to nail the exact bottom. But every time we see one of these really sharp pullbacks, I scale in just a little bit, and then I try and identify the next key support level where I'll go ahead and scale in a little bit more should that support level be back tested.
So what are you seeing in kind of the long-term chart? Are you still seeing a breakout in gold long term? Is this just kind of a back test of a trend line, or like are you still seeing bullishness long term?
Yeah, the long-term chart of gold is undeniably bullish. I mean, any technical analyst is going to look at a long-term 10-year monthly chart and say that's a big old cup and handle. And those handles can take, a bit of time. So that's the big question is how long until we start to move up and get the backside of this handle on this big cup and handle pattern. You could go as low as like 1550 or so and still be in a bullish chart pattern from a long-term perspective. I don't think we're going to go that low, but yeah, the long-term viability is really not in question. But from a short-term perspective, have we seen the worst or not? I think that's a little bit more up for debate.
Absolutely. And then for silver, I mean, obviously it's not the same cup and handle as gold, but it kind of like has been trending flat over the last few months, and then it just broke down. Mm-hmm. What are you seeing in that chart?
Yeah, I mean, it's still in its sideways consolidation pattern from August of last year. We got to about $30, $29.92 to be exact. And then the low end of the range is 22. So we're still right in the middle of that range. We did lose key support at the 200-day moving average. And for those who might not be familiar, from my perspective, that's the most used input to these institutional trading algorithms that really drive these markets. So when price is trading below the 200-day moving average, a lot of the institutions tend to be in a sell the rally mode. So that's significant that we're below the 200-day moving average right now. But I think I see key support at 23.75. And then below there is about $22. Just like in gold, I don't think we're going to go to 22, but it's possible. It's an outside possibility that I'm mentally prepared for.
Great. So do you look forward to these pullbacks in terms of like the opportunity to buy? I mean, clearly you know when to buy low if given your your actual portfolio that you get on the Silver Charters Nation. You've gotten into these positions extremely early and you're still up given all this weakness. So do you just like look forward to these moments and are you gonna, will it bother you if it comes even lower?
Yeah, and it depends how much cash I have or how much cash, the individual investor has. Obviously if I had a pile of cash, let's let's bring it even lower if we could. So I don't personally have that much cash right now, but I still welcome the pullbacks because I have some cash available to deploy. And my portfolio is still up, and I say this with humility, but the reason it is because my strategy involves buying on these sharp sell-offs. March of last year when there's quote unquote blood in the street and everyone's panic selling. That's when I'm in there scooping up shares on the cheap.
Exactly. And that's what we're seeing right now. And, just so much FUD. I mean, let's just think, what are some of the big fear narratives of the day are? Like, for instance, Bitcoin is going to replace gold. I mean, Bitcoin's down too. So I don't know how great that narrative is right now, but nothing's really veering you away from these three key assets.
No, silver and gold specifically have a 6,000-year track record of things trying to replace them as money. And, nothing has succeeded yet. And I don't think anything will. I mean, that's not a knock on Bitcoin. I think it's a fine, speculation if you're into that, but I'm not anti-Bitcoin, but I'm just saying I don't think Bitcoin really poses a threat to replace gold.
Yeah, so then switching over to uranium. So yeah, it's run up. A lot of these kind of stocks have pulled back pretty drastically at this point. Has the narrative changed at all for uranium?
Yeah, it has, and it's gotten more bullish. Uranium is one of those markets where I try and be just rational and unbiased, but the more you dig into it, the more you study it, the more bullish you become. That's just what happens with uranium. And one of the big catalysts we have looming here is the Sprott Physical Uranium Trust that just launched a couple of days ago. So that's going to be another just a consumer of physical uranium. It's going to skew the supply demand fundamentals more in favor of a higher price of uranium. So the story just continues to get more bullish. And the pullback has been really sharp over the last 6 weeks, but it's a little bit more constructive than in the silver miners because for the most part, speaking broadly here, most of the quality uranium stocks are still above a rising 200-day moving average. So they're still in an uptrend. And those algorithms are still going to be in buy the dip mode, where a lot of the silver miners are kind of below that 200-day.
Okay, so that's really interesting. So what are you doing as far as the silver miners go? Are you, because it has cracked that uptrend, how would you play that?
Well, I'm scaling in on weakness is my strategy, but the silver, just looking purely at the charts, the precious metals complex, I think we're very close to a bottom if we haven't hit one already. However, that doesn't mean, let's say we hit the bottom last week or early this week. That doesn't mean you just turn around and rally straight up. It could take, there's been some technical damage inflicted. There's no denying that. So I think a likely scenario is it takes a little bit of time to carve out a new base before we see those new highs, that a lot of us were expecting this year, including myself. That might take just a little bit longer than we originally thought.
Okay, so that's what that means to you. It just might take a little more time to come back up, and you'll still be scaling in on weakness, right? On big down days, regardless of the technical damage, right?
Exactly. Yes. Yeah. Because I like to say the fundamentals tell me what to buy. The technicals tell me when to buy. So the fundamental thesis has not changed. And that's my reason for being in the sector.
Right. Gotcha. And then for uranium, those stocks are in an uptrend still, and you're going to accumulate those on weakness as well.
Exactly. Yeah. I don't have much cash available to deploy into that sector, but if I did, yeah, I think right here, right now is very attractive. Now, could it go a little bit lower? Sure. But these are very attractive entry points. In our newsletter, you might have seen the last, going back 6-7 weeks, I was kind of stressing that, I'm very bullish over the intermediate to long term in the sector, but it is technically stretched and we're susceptible to a sharp pullback. And we've gotten that. So now it looks more attractive to me.
Great. Yeah. And I was actually yesterday, Elon Musk, everything he says kind of moves the crypto markets, right? Well, he said they were talking about Bitcoin mining and how they can get it into kind of being environmentally sustainable. And they were talking about, all the challenges of it, how solar and wind just will not cut it. And he was telling Kathy Wood how, because she was saying, we can get it all into solar wind, and we can, on the overage days, we can kind of like increase the mining. And he was saying, no, that's just too intermittent. It won't work. He's saying nuclear energy, though, will provide that baseload power to mine these cryptocurrencies consistently, which is kind of interesting because it's like kind of an analogy for the rest of the economy, right?
Yeah, it sure is. Yeah. I'm not against wind and solar or anything. I have solar panels on my house, but it's not a very efficient. It's not the green energy that a lot of people think it's going to be. There's you got to dispose eventually of those solar panels. I look at energy returned on energy invested. So over the long term, they're not like a panacea that a lot of people think. Maybe they have a place. Wind and solar. I have solar on my house, but it's not some kind of solution to all of our problems.
Exactly. But it's just interesting hearing, someone as influential as him bring up that use case for uranium. Is that kind of what you're waiting for just wider adoption of that obviousness?
Yes. Oh, yeah. So that's the point of your, sorry to go off on the tangent before, but yeah. Yeah. So he's the second one now that, I don't know how to say his name, Chamath guy or whatever. He's a billionaire. He was speaking about, I think Bill Gates has been talking about uranium too. So you've got these billionaires now starting to mention it, where if you go back a year or two ago, nobody was ever talking about uranium. It was basically unknown, and we're still in the very early stages, but it's good to see, some awareness coming to the markets. I think more market participants are aware of the thesis.
It just takes some mainstream adoption, which it does seem like there's a little bit trickling in. So I think because that Chamath guy, he was like the big SPAC Like he was all about buying these overvalued tech stocks. And now if he moves into uranium, that's huge.
Right.
Great. So just one other thing I wanted to touch on. You're not too big on oil. Is there a reason you're not so heavily weighted on that?
Uh, yes. I mean, I'm bullish on all commodities to include oil and energy. It just, for me, I find that being focused on, silver, uranium, and gold and battery metals, it's my expertise. There's so many cross currents in the energy market. I mean, there's geopolitics, there's OPEC, there's so many factors that you have to consider, and it's just not my expertise. So it's not something I'm heavily invested in at all right now.
Got it. Okay. So Nova Royalty, I'm just looking at your watch list, right? So you're looking at
Sure.
several companies such as like Nova Royalty. Are you waiting for a bigger pullback in that? It's already come down a little bit, right?
I mean, that one, yeah, it's beaten to a pulp. I scaled into that one over the last couple of weeks, and I would welcome more of a pullback in that one. I'm not sure we'll get it, but I would welcome one.
Right. Because is that your exposure to copper essentially? I know you're big on silver, gold, and uranium, but is that kind of like your main exposure, or are there other kind of ETFs that you're interested in?
Yeah, I like we are laser focused on silver, uranium, and gold. I feel like those offer the most asymmetry right now, the most asymmetric setup. But I'm also bullish on the battery metals, and copper and nickel are my two favorite battery metals. And I mean, there's different ways to play it. I think a more conservative approach might just be COPX is like a copper miners ETF. That's just a simple way to do it in one ticker. But yeah, there's several stocks I like.
Yeah, and this commodities kind of approach focus that you have has really worked for you, clearly, given the gains. But what about the narrative of, this is all, and I'm talking specifically about Cathie Wood, right? She runs that big tech fund, high flying, real high multiple, some would say overvalued tech companies. She seems to think, and she's probably talking her own book here, but she seems to think that because of these secular deflationary trends, right? You have automation hurting the labor market. You have technology. You have aging demographics. That the inflation won't really be that driving narrative, right? It's more transitory. So how are you staying comfortable in these commodities-backed positions, given all those narratives about how inflation will be transitory?
Yeah, so I can't see a scenario where the overall long-term trend of higher inflation does not play out. Now, I remain open to the possibility that we see a shorter-term deflationary impulse. A lot of times you can have two very intelligent analysts with opposing viewpoints who are both correct, just in different timeframes. So it's possible we see some deflation, but over the longer term, the natural market inclination right now is towards deflation. That's the natural market forces. Now, opposing that is Federal Reserve or central bank monetary policy around the world. And to think that we're going to have deflation when central banks around the world want inflation, it's to say that there's a limit on the amount of currency that they can create. I mean, if they ultimately want inflation, they can get it. So I don't think there's any limit that they'll stop at in order to get what they want.
So just kind of a vicious loop of money printing, right?
Yep. Yeah, exactly. And, some people think that maybe, the Fed can figure it out. These central planners can figure it out. They can figure out the Goldilocks formula. That can't happen over the long term. I mean, we're going to either have a massive deflationary bust or an inflationary depression. And unfortunately, I don't see any other way. And, history suggests that 100% of the time, these governments choose inflation because it, number one, kicks the can down the road and people don't understand it. The opposing thing they could do is make massive cuts, and no politician's going to do that because then the blame goes on them.
Yeah, absolutely. And this is kind of the long-term thesis that a lot of gold, silver investors have. It's the reason they are gold and silver investors, as protection.
Mm-hmm.
But what do you say to the argument that they've been underperforming? Like there's other asset classes that have done well the last 10 years. It's been kind of difficult to be an investor. Again, you've traded well by getting in at the right times. You haven't chased the highs. But what would you say to kind of encourage people who are in this trade and it's been discouraging?
Yeah, I can totally relate to that. And it's been frustrating to me too. It's taken longer than I thought to play out. But, nothing's changed for me. And there is opportunity cost. I mean, you could look back and say, hey, I should have just been in the NASDAQ or these tech stocks. But I don't think anyone's going to deny that those things are they're bubbles from a technical perspective, from a fundamental perspective. The PE ratios, they've never been so overvalued on any way you measure it. So eventually that's going to have its day of reckoning. And what I would say to the person who's maybe overly concerned about this, it's really important to think about two things that I don't think get talked about very often. Number one is position sizing, and then number two is a personal strategy that fits your risk tolerances and objectives. A lot of people want to focus on, what stock should I buy and what's going to happen next week with the market. Those are good things to worry about. I mean, that's part of it, but personal strategy and position sizing, come up with a position size that you're comfortable with, that allows you to sleep at night.
Yeah, that makes sense. And the true value investor enjoys dips like you, right? You want to buy things low, even though it's painful. That that's how you get value in the long term. Like, look at gold in 2000, right? I think it was probably the ugliest, worst chart, most depressing chart you've ever seen, right? But from there, that's when it went up huge, right? It wasn't like just this epic bull run forever that you could just grab onto at any time, right?
Exactly. Yep, that's exactly right.
Yeah. And you're right. These big tech bubbles don't last forever. I mean, even if you look at like Japan, some people think we're like 20 years behind Japan because they tried this money printing experiment already. And then they had their lost decade in stocks for like 20 years of just depression. If you look at the Nikkei chart, but it took like 10 years for it to run up huge. And it was just never ending. And no one ever saw that big downturn coming. But is that kind of how you're investing, like knowing that this bubble can't last forever?
Yeah. I mean, I have very little exposure to general equities. I don't want to say zero. I've got a separate part-time job with an airline, and they contribute to a retirement plan. And so that's my exposure to, if this whole thesis is wrong, well, I'll still have that. But I can't envision a scenario where silver and gold don't do a full accounting for this expansion of debt-based fiat currency, and where the uranium price doesn't rise to meet the growing demand for nuclear around the world. But anything's possible. So,
yeah, I love that, the full accounting, right? So everyone's gonna be called to account, and there's probably gonna be a radical shift eventually, right? So you look at the ratios, the stock market to the precious metals, long term. What is that telling you in terms of like on a relative basis, which is overvalued, which is not historically?
I look at the Dow to gold ratio. A lot of people are familiar with that, and in bull markets, that Dow gold ratio typically peaks at about 1-to-1. So you go back to 1980, the Dow bottomed at 850, gold peaked at 850. There's your 1-to-1 ratio. Did the similar thing back in the 30s. And I think it's going to do that again. Right now, it's about a 20-to-1 ratio. So that means gold, physical gold, should outperform stocks by a factor of 20 over the course of this bull market if we return to that ratio. And if you look at silver, it's even more stretched. To return to the ratio of 1980, I don't have the exact numbers, but silver would outperform the Dow by a factor of 50. And that's a longer term thing over the next handful of years. I'm not looking for that to happen this year or anything, but over the longer term, yeah, I think that's totally possible.
Right. So that's why it makes sense to position while these are low and depressed, right? You can get in really early.
Absolutely.
Your updates have been really helpful, right? In these crazy markets, the way you time the market, you seem to buy on like the deep red days, and you get rewarded for that. So thank you again for providing those. Where can people go to kind of learn more from you and keep track of those updates?
Sure. Yeah, you bet. So we're making some major upgrades to the website and to our membership now. So it's a really exciting time. The membership is really pretty new, and I'm just humbled at how fast it's grown. So for those of your listeners who may not be familiar, we have a free letter that goes out every week, and the goal is to provide just a ton of value for free. We don't spam you or hit you with high pressure sales tactics. And you can get that at silverchartistnation.com. And that's a special link just for your listeners. After you sign up for that free letter, you'll have the option, if you choose to upgrade to our low ticket service. It is extremely affordable. We make it accessible to as many people as possible. However, when we do launch the new website in about a month or so, the price is going to go up just a little bit to cover those extra costs. So regardless, we'd love to serve you at whatever level is best for you. And the premium membership is where you get the real-time look at exactly what I'm doing, the over-the-shoulder service.
Absolutely. Thanks so much. So we covered a lot. Is there just anything else, any closing remarks you have for the investors facing these crazy markets?
No, not really. I mean, just ask yourself, what are the reasons you got into these markets in the first place, and have those reasons changed at all? And if the answer is no, then there's really no reason for concern. And also consider your position sizing. I think there's a lot of people who are maybe new to the sector who are just like all in on junior mining stocks. Now's the time to correct that. Come up with a strategy, position sizing that fits you, that allows you to sleep at night.
Perfect. Well, thank you so much.
You bet, Elliot. Thank you so much.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.